In today's financial markets, millions of traders lose money every day. Not because they lack skill, but because they misunderstand how the market truly works. Apex Market Dynamics reveals a deeper structure behind every chart, a system used by institutions, hedge funds, and market makers to move price with precision. In this video, we'll break down the real forces behind liquidity, manipulation, and trend creation, and how you can use this knowledge to trade smarter than ever before. What is Apex Market Dynamics? Apex Market Dynamics is a trading framework based on understanding how price is engineered. Instead of focusing on indicators, Apex focuses on liquidity creation. Liquidity grabs market imbalance, order flow, market expansion, and reversal. This approach studies why price moves, not just how. Once you understand the logic behind institutional movements, the chart becomes predictable, organized, and controlled. Stage 1. Liquidity buildup. Every major market move begins with a simple phenomenon: liquidity buildup. This is when the market creates obvious structures like equal highs, equal lows, tight consolidation, trend lines, retail support, and resistance. Most beginner traders think these areas are strong zones, but apex traders know the truth. These levels exist to collect orders, especially stop losses. The market uses these zones as fuel for the next big move. Stage 2. Liquidity grab. Once liquidity builds up, institutions will target those zones. This is when you see quick spikes, either above a previous high or below a previous low. This is not a breakout. This is manipulation. A liquidity grab happens in seconds or minutes. It traps breakout traders, hits stop losses, and injects massive volume into the market. This is where price shifts direction, creating the perfect moment for an apex entry. Stage 3. Market imbalance and fair value gaps. After liquidity is taken, the market often creates imbalance. During this stage, candles move rapidly in one direction, leaving behind gaps known as fair value gaps, or FVGs. These gaps are clear signals of institutional activity. Price will usually return to fill part of the imbalance, giving traders a high probability re-entry area. This concept is essential in Apex Market Dynamics, helping you avoid emotional trades and stick to logical, high-quality setups. Stage 4. Market expansione. Once imbalance and order flow align, the market begins its expansion phase. This is where the major move happens. Clean price action, strong displacement, clear trend direction. Apex traders enter during the expansion phase using premium and discount zones, order blocks, Fibonacci, OTE institutional zones of interest. This is the stage where you catch the big move, the type of move that changes your entire trading curve. Why traders lose without Apex knowledge. Narrator. Most traders lose because they trade breakouts, trend lines, and retail support zones. They never realize these levels are market's targets, not signals. Apex Market Dynamics teaches you the blueprint behind the candles, making the market feel controlled, predictable, and logical. Final thoughts. The market is not random. It follows a cycle. Build liquidity, grab liquidity, create imbalance, expand. Once you understand this cycle, trading becomes clear and structured. If you want more advanced breakdowns, chart lessons, and real examples, hit the like button and subscribe. This is Apex Market Dynamics, the truth behind the charts.